But the residential real estate market has been on fire of late, and housing finance stocks are back in focus. What's driving optimism in the housing finance sector, and how strong is the demand for homes? We ask K.K. Mistry, the Vice Chairman and CEO of HDFC, who joins in now. Mr. Mistry, good morning, and thanks so much for joining us on the channel. Before I ask you about, the housing market, there are some new norms that have come through on recognition of non-performing assets, both for banks and NBFCs. We understand that there will be a daily NPA SMA recognition that would have to be done. And I expect that could be operationally challenging for the sector. But you tell us, how would that really impact the segment? And do you see NPAs rise over the next, year?
All right. So Sonia, let me explain. If you look back 15 years ago, for example, NPLs were recognized on a 180-day basis. At that time, it was changed for housing finance companies, and it was changed from 180 days to 90 days. So basically, you have to set your system to, adhere or to get used to the new ruling. Now, what this new ruling says is that historically what used to happen till now is that if a borrower was outstanding, let's say for 3 months, 90 days, he was classified as a non-performing loan. And then after that, if he paid, let's say, 1 or 2 installments, and therefore by virtue of making those 1 or 2 installments, his outstanding came down to below 90 days, he could be upgraded to a standard asset. Now what RBI is saying in the new guidelines, which came in a couple of weeks ago, is that till every rupee outstanding on that account is received, you cannot upgrade that loan to a standard loan. So that is a difference. Now, what it would do is, and there are enough analyst reports on the subject, temporarily it will have the effect of reflecting or resulting in a higher level of non-performing loan being reported. But to my mind, it's a question of time before you start getting used to the new system and you start setting your processes, setting your systems in a manner in which you are able to adhere to the new requirement. The other thing I would like to say is that there will be no P&L impact, at least for many of the companies, because NBFCs follow the Ind AS accounting norms, and under the Ind AS accounting norms, the provisioning requirement is a lot higher than what is required in most cases from a regulatory standpoint. So to my mind, there will be limited impact to the profit and loss account for most companies. For us, we don't see any impact on the profit and loss account, but the reported gross non-performing loan number may look higher for 3 or 4 quarters till the new systems are put in place.
Okay. Mr. Mistry, good morning. 2-part question how's overall demand for real estate going to pan out from here on? And I ask that because it looks like rates may have bottomed out, and the governments have also withdrawn the stimulus measures, for example, the stamp duty reductions, etc. So with the combination of the 2 factors, how are things going to pan out from here on, you think?
Look, the stamp duty reduction is 1 year old.
Yeah.
It's not that it's withdrawn now or last month or 2 months or 6 months ago. It's an old story. And as far as interest rates bottoming out, I've always said this for a while now, that interest rates have bottomed out. But I don't see that having a significant impact on demand. I will tell you what's happened. In the period from 2017 to 2019, or maybe even 20, the demand was largely focused on the tier 2, tier 3 towns and the outskirts of big cities. In the last 1 or 2 years, we've started seeing a pickup in demand in the metro cities. So cities like Delhi, Mumbai, Bangalore, Pune, Hyderabad, Chennai, these are the cities which are reporting very strong growth. Now, there are many factors which are causing this growth. To my mind, the first and the biggest factor is that from 2017 till 2020, property prices in the metros never really went up. But income levels consistently kept rising. So if you look at incomes rising at, let's say, 8% a year for a period of 4 years or so, you're looking at a cumulative growth of nearly 34-35% in incomes. So you have incomes 35% higher, you have property prices exactly where they were earlier, and therefore, obviously, in terms of affordability, it's been a great time to buy a house. Second, of course, is what you said, interest rates are at a very low level. In my 40 years of working, I've never seen interest rates at sub 7%. That's also one more factor. The third is the feel-good effect. The feel-good effect in the economy is very strong. We see this on a day-to-day basis. We see this every day. Shops are full, malls are full, hotels are full, restaurants are full, and so on and so forth. So that feel-good effect which is there is keeping people motivated or making them feel good. Stock market performance. A lot of individuals have invested in stock market. Stock market has done well. So again, that has added to the feel-good effect. And I think lastly, the feeling that there was an oversupply, particularly in the Mumbai and Delhi market, that feeling has gone away. So people have realized that with the pickup and the sharp pickup in demand that has been seen in these metro cities, that there isn't really that much of oversupply in the market, and therefore the feeling that you could keep waiting and property prices could decline, and what was a hurry, you could buy the property 1 year or 2 years later, that feeling has gone away. So a lot of people were sitting on the sidelines and now coming forward to buy houses. To give you a number, our September numbers are all in public domain. Even if you look at October, the first month of this quarter, October, we saw the highest ever level of disbursement we've ever had in HDFC's history in a non-quarter end month. And the second highest in any month, including a quarter end month. So clearly the demand is very, very strong. And to my mind, will sustain for a long time.
Ms. Mistry, good morning. Prashant here. So which is the strongest micro market? Which micro market has got the strongest and longest runway for growth in your opinion?
I mean, I'll be very honest with you, Prashant. It's almost all over the country. It's not that any market which is much more or much less than another market. Whether you look at Mumbai, you look at Delhi, you look at Pune, you look at Bangalore, you look at, Noida, you look at wherever, Jaipur, Chandigarh, all of these places are showing high levels of growth. So I don't think you can single out any one location.
Would Bangalore be, not just how they're doing now, but you would have a sense of some of the underlying drivers as well. You outlined the broad top-down factors driving this demand growth. But micro markets are also different. Bangalore, for example, is very different because of the tech industry, the startup culture, all of that, right? It's been discussed before. In terms of runway for growth for a number of years, could that?
I would say, I would repeat what I said, that the runway for growth is there really, truly across the country. What has changed, as I said, is that earlier it was the tier 2 and the tier 3 towns which were leading the growth. And now we are seeing the tier 1 towns, the metros also participating in a big way in the growth.
Okay. I think, Mr. Mistry, what really stayed with me is you saying that, in your 40-year career, that's remarkable, really. I've worked less than half of the number of years that you worked, and I'm already so tired. I can just imagine how you've been going on for 40 years.
Don't make me feel so old.
I didn't say the number, right? You did. But in any case, no. It's really remarkable there. But I wanted to come back to this point of interest rates, stressed assets. I just want to understand first on lending rates itself. Do you think things have bottomed out? And what do you see as the trajectory? Because, there has been a lot of volatility in the last 1.5 years. But now, do you think the lending rates have sort of seen a bottom? And what is the expectation, say, over the next, say, 6 to 12 months?
Sonia, my personal view is that lending rates have bottomed out. And I said this even 3 or 4 months ago. So I said there is scope for maybe 5-10 basis points reduction here and there. But other than that, rates have bottomed out. And that is what I would continue to say. I must compliment RBI for what they've done on handling this whole COVID crisis. Not only have they lowered interest rates, not only have they pushed liquidity into the system, but they've ensured that every single segment of the market has access to that liquidity. And because every single segment of the market has access to the liquidity, you've not seen any collapse of any institution, or everyone has been fairly comfortable here.